Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 10th of February 2021 and we're looking at gold and two very opposing views as to where it could in fact be heading in the next couple of months. So let's take a look. One of the key questions constantly being asked of us on this channel is where we believe gold is heading next, and of course silver too. Now with gold as at 1922 GMT, which is the time of producing this podcast, we can see that its price is currently standing at $1,843 an ounce. Now this is almost $30 higher than Friday's close and is pivoting around what we regard as a rather important $1,850 level. Now, depending on its movement in the next few hours, gold will quite possibly have closed 3 consecutive days higher, which is quite bullish. But many analysts agree that it really needs to close and hold above 1850 for it to be indicative and relevant. Now, Gary Wagner, a bit of a technical wizard, and someone often interviewed by Kitco and other channels, sees 1850 as resistance. But if gold can manage to surpass this, he believes its next level is 1875, and then almost, not quite, but almost, a free run up to 1960. He realizes, of course, and as we have pointed out, that there are some psychological resistance points between 1875 and 1960, of which we all know 1900 is clearly one and 1950 another. Now yesterday we produced a video entitled Elon Musk's Tesla investment boosts Bitcoin above $48,000. Is this good for gold and silver? Where we pointed out that Elon Musk's Tesla has invested $1.5 billion into Bitcoin, thereby causing its price to suddenly shoot up above the $48,000 mark, another all-time high. Now, a confession here, we really don't know what we have to do to get our subscribers to look at our Bitcoin videos, because to be frank, the viewings are quite paltry, and we do try to impress upon you and cannot really overestimate that Bitcoin funds and cryptocurrency funds are potential alternatives to gold, or at least are depositories which compete with gold. And it really is important to be aware of this. So we are rather flummoxed as to why we cannot even attract 1,000 viewers on this subject when someone like Mike Maloney produces a video number of hours later and obtains 65,000 views. Now, we admit he's got 30 times the subscribers, so we expect more views, but he gets at least 60 times the views, and sometimes on this subject 120 times. And this does not make any sense to us other than the fact that those of you listening are just not interested in Bitcoin. But we have to warn you, it's not a good idea to turn a blind eye to this subject because it does have ramifications and it is competing for gold and silver funds, which is what this channel is primarily based upon. Now, on the back of this too, Tesla, also in its last SEC 10K filing, quoted the following. In January 2021, we updated our investment policy to provide us with more flexibility to further diversify and maximize returns on our cash that is not required to maintain adequate operating liquidity. We may invest a portion of such cash in certain alternative reserve assets, including digital assets, gold bullion, gold exchange traded funds, and other assets as specified in the future, unquote. Now this is important because very much like Warren Buffett, where Elon Musk goes, so do many other investors and entrepreneurs. Now, we admit $1.5 billion has moved the price of Bitcoin quite significantly. And we accept that it won't have, if that amount is invested, quite the same effect on gold, for example. But nevertheless, it is an important factor, at least for ensuring to some extent that the gold price is underpinned, even if it fails to move it that much higher, though we have witnessed a highering of the gold price recently. One also has to ask, then, who will follow Elon Musk and do the same? Well, please remember, it was around 7 or 8 weeks ago we pointed out that hedge fund owner Anthony Scaramucci was then setting up his own Bitcoin fund when the Bitcoin price was just over $20,000. And we stated that this was just the beginning of institutional interest in that cryptocurrency. Now the price is more than double. Now we're not saying exactly the same is going to happen with gold, but we have been beating the drum for almost 2 years that institutions and investment advisors are now including gold within their portfolio recommendations, whereas previously they were mostly left out. You may recall, as some of you commented somewhat adversely, that we were reading out some of the articles in FT Advisor, which is an industry publication where advisors were actually stating what they were doing in relation to gold investment advice. Now, also underpinning gold, and certainly proving that gold is looking good moving forward, is the fact that Biden's $1.9 trillion stimulus package is likely to be passed, if not this week, then next week, which will eventually lead to a weakening of the US dollar. Again, we produced a video yesterday entitled $1.9 trillion stimulus package likely to be successful, implications for gold and silver, which underpins that debate. Now, interestingly, we can see that we've had nearly 1,900 views on that video. So we know that it's the Bitcoin heading that is perhaps turning everyone off. And honestly, it's a shame. We also produced the video Gold, Silver, Dollar, Equities, Oil and Bitcoin all rising after Yellen's comments. And in each of these videos that we've just mentioned, we highlighted our prediction and growing trend of a move towards a much more relaxed monetary and fiscal policy by the new administration and the central bank, with attention given to stimulate the economy as quickly and as largely as possible. And we've placed links to all of these videos mentioned below. But all that said, our friend, Harry Dent, popped up on Kitco in the last 24 hours with a very differing view and storyline. Yes, he agrees the stimulus is just another round of spending which will result in ever-increasing money printing, which simply cannot go on indefinitely. He was even talking potentially about a US debt clock of around $40 trillion by the end of this administration. Yes, 40 trillion. Dent is of the view that equity markets will begin a significant fall, if not crash, in April of this year, potentially seeing the S&P 500 falling from its current 3,915, or however high it goes to 2,100, and the Nasdaq falling by 50%. You see, he quotes that $520 trillion of financial assets, such as stocks, real estate, and bonds, represent 6.2 times the US 84 trillion a year GDP. When even under good growth periods, these financial asset figures are normally 2 times, or in boom times, 2.5 times annual GDP. In other words, he foresees at least a $200 trillion fall in the value of these assets very soon indeed. His issue will be a period of up to 1 to 2 years deflation rather than inflation, leading to gold falling potentially to as low as $1,000 an ounce, and silver somewhere between $7 and $14, depending upon its relationship to gold, that is, it's the gold-to-silver ratio. You see, his argument, which has some validity, is that gold does well in inflationary times and poorly in deflationary times. He does, however, believe that millennial spending will then come into its own by 2023, and a sharp recovery then begins to occur, rather than experiencing many years of stagflation or stagnation, depending which way you want to look at that. Now, this is an interesting view and consistent with what he said some 6 months or so ago, which we also published on our channel. Now, we understand Dent's theories on cycles and can see the economic logic in his thinking. It's simply that previously his timing has been way out, sometimes by many years. Often, he claims, that's the result, though, of market intervention or manipulation. Now, if one goes back to what happened to gold after the 2008 economic crash, we can see that gold fell to $713 on the 13th of November of 2008, after Lehman Brothers had gone bust the previous September, and then it continued a slow but gradual rise to its peak, which was then at $1,895, nearly $1,900, on the 5th of September 2011, taking almost 3 years to achieve that. This time he foresees the recovery to be more rapid, as he senses that the clear-out this time will be thorough and complete, without central banks being able or willing to try and prop things up. So two diverging views on what's likely to happen in the short term to gold prices and markets generally. And so we only have a few months to wait to see if Harry Dent's prophecy of doom occurs or doesn't. What do you think? Are you siding more with Harry Dent or with Gary Wagner, who believes that prices are more likely to rise than fall, providing those key levels are hit first? Do share your thoughts, and meanwhile, if you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign so you're notified of our videos as and when they're published. And yesterday we published a video on the Richard and Greg channel, which you're also welcome to view. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.